Well, let's delve further into the story behind those numbers. We're joined by I&M's Regional Director, Chris Lowe. Mr. Lowe, great to have you with us on the show today. Now, of course, as we just mentioned, I&M's top line numbers, they're pointing to a sustained growth momentum in the first half of this year. Give us some insight into some of the factors that supported the group's growth and, of course, an overall recovery in its banking business.
Thank you, and thank you for this opportunity. Pleasure to be here. I&M has had a good first half coming out of the COVID lockdowns and restricted business, there are a number of reasons behind the results that you've just read out. First and foremost, we've seen good customer growth on the back of our diversification under our Imara 2 strategy that we launched in 2020. That's meant that our deposit growth, particularly in the current and savings accounts, has grown substantially. Why is that important? They represent nearly 40% of our overall deposit base, and that mix between higher cost fixed deposits and CASA, as it's known, give us a lower cost of funds, which in turn saves us on interest expense to our customers. But on the other side, the growth in deposits has enabled us to build our loan book and, as again you mentioned, invest in government securities. With an interest rate rising environment, this has contributed substantially. On the below revenue lines, we've invested heavily in our digital strategy, and we've had good success in managing the quality of our asset portfolio and keeping our provisions prudent, but not as high as they were in previous years.
Well, we'll get more into your digital strategy, but first it was interesting to know that across the region, we saw all your subsidiaries across Rwanda, Kenya, Uganda and other markets. They saw a rise in profits after tax, except Tanzania. It saw a marginal drop in profit after tax. In fact, it saw a 14% rise in operating expenses. So give us a sense of the reasons behind the performance there.
So across the region, as you've said, we've seen good growth and good profitability from most of the entities. Rwanda is our second largest business, contributing around 10% of our pre-tax profits as a group, followed by Mauritius, which is around 5%, with Tanzania and Uganda, which is now fully accounted for. Last year it was just May and June included in the income statement, contributing the remainder. Overall, as I say, around 20%. Many similar reasons to the Kenya performance, up 27% at post-tax. We've seen good growth in our balance sheet. We've seen an increase in our margins and our cost increases. Tanzania in particular, you mentioned there, due to our continued investment in our digital and technology platforms, as well as our cybersecurity, which we'll come to in a minute.
Now, despite this post-COVID recovery, this year has come with a new set of challenges, both local and globally. We saw a low credit uptake during elections here in Kenya. Also, the impacts of the Russia-Ukraine conflict. In fact, a report showed that loan defaults remain the biggest challenge for Kenya's banking sector. Do you agree with this? And of course, what are some of your biggest risks to your business this year, and how are you handling it?
So from an outlook perspective, we maintain a positive view of the opportunity for growth of the industry. As you've said, elections in Kenya this year, just having happened, have meant there's been much lower growth in business than in prior years, but we expect to see some pickup in that respect, offset by the fact that rising commodity, fuel, food prices, inflation-driven effects, combined with supply chain damage, both from COVID and now from the Ukraine-Russian war, have meant that there has been some dislocation in business, and therefore the potential for rising non-performing debt is definitely there, to your question. From our perspective, We believe the industry is well capitalized. We're seeing good liquidity across the banking sector. And with the introduction of risk-based pricing models that the Central Bank of Kenya has insisted on, again, there's been an improvement in the assessment of credit risk upfront, as well as a tightening of collections and monitoring across the industry. So while there is that risk there on the credit side, we believe the industry will manage through it. Other risks, we're coming to digital, as you said, but cyber risk is increasingly an issue. There have been increasing attacks in the Kenyan market on card BIN numbers, with the perpetrators making off with substantial amounts of money. And of course, changing customer behavior is another aspect. Can every bank keep up with the pace of demand of anywhere banking, as opposed to the more traditional branch banking? So there's three areas: credit, cyber, and changing customer behavior.
Now, we certainly have a lot to talk about in those results, but we're running out of time. So very quickly, before we leave you, I'd like to talk about the fact that you've been rolling out digital solutions for your customers as part of a bigger strategy, such as the I&M Brisk, which I hear you launched in Rwanda and allows customers to transact seamlessly across borders within the region. Talk to us about some of these new digital systems we're seeing from the bank, the new digital solutions rather, and of course their impact they're having on the banking business.
So we're finding increasing usage of non-traditional channels, i.e. branches, digital channels. About 75% of our customer base now prefers that as their means to either access the bank or prefers their solutions delivered digitally. Initiatives that we've had are across the region. In Kenya, which generally leads the way as the home market, we've launched our new on-the-go app and web-based banking capability. We've just completely reshuffled the offerings that we have, whether that's for the retail, the higher net worth, the small business, or the corporate side, combined with a range of MasterCard optionality, which we think will be well received because it focuses on customer needs. MSME and retail is another area that we are working hard to diversify into. We've just signed an SME loan guarantee scheme with the FMO in Kenya, and IFC helped us pre-pandemic write out a strategy for Rwanda, and that business is now gaining good momentum. You mentioned Brisk. That's a single account in Rwanda, Tanzania, and Kenya that enables customers to transact with their suppliers or their distributors across the region in a very quick and efficient way without having to open accounts across the region. We've got digital loans on mobile in Tanzania, and we've got agency banking building in Rwanda and in Tanzania. Not the traditional payments business, but also lending, savings, and even agents originating new business. So it's really across the board, both geographically and across segment, that we're seeing digital innovation really driving the new way of banking in the region.